Welcome back. So today we're seeing the fallout of Liberation Day. Those of you guys that watched my video yesterday knows that, yeah, whatever that was announced yesterday, all the tariffs, they came in way worse than expected. So like I figured, Asia did not do well. Asia did not do well. Europe did not do well. And now the US is not doing well. So obviously, it's been a few hours since market open, but you can see there has been no recovery whatsoever so far. Dow's minus 1300, NASDAQ is minus 900. We're talking about minus 5%. So it's not looking so good. It's not looking so good right now, but we do have some good things that's happening with Bitcoin and crypto. It may not seem like it, but wait until the end of this video. I'm going to share some important stuff with you guys. But in the meantime, what is going on with everything? I mean, obviously, everything is being sold off. Okay. MicroStrategy, in case you're wondering, minus 9%. Coinbase down 7%. Bitcoin, though, is down, but holding around that 82,000. I told you guys that's an important level. If Bitcoin can hold around this 82,000, this low 80,000 mark, absolutely fantastic. And it is doing so right now. In fact, yesterday, after my video, Bitcoin actually climbed up to about 83, 84,000, which is really positive. I got some, again, really positive news to share about Bitcoin. And despite all the selling today, if we can hold at this level, this is the best case scenario. And it shows how strong Bitcoin is and how many people are still buying despite what is happening right now. But what is going to come from all the tariffs and everything, okay? In case you missed it, I mean, some of the highlights, okay? 10% blanket tariff on all imports from every country, 10% tariff. That means there's 10% tax. China is now facing a 54% tariff. 54%. Almost all of our goods are from China. So think about that. Nike, Apple, and I don't know. I mean, you name it, everything. All of our goods from every retail store is basically produced in China. The chip manufacturers I mentioned, NVIDIA, AMD, Micron, everything that's from TSMC, everything from Taiwan, tax 32, 33%. So all their shares, all the companies are tanking. Anything from the European Union, 20%. Okay. And others as well. You got Vietnam, that's 46%. You have India, you have Japan, I think it's 24%. You have South Korea, all over it. A lot of people are thinking we are going to have a global trade war. A lot of these countries are very, very angry, and they're not just going to sit there and take it. Although the thing is, Trump and administration is arguing we're only doing this because they have been doing it to us. This is just reciprocal. We're not starting it. This has been ongoing for quite a long time. We just let it happen for a long time. And now we're just taking steps to even the playing field. So I guess it depends on which side you're looking at. If you're looking at it from this view, then yes, we're just trying to level out the playing field. But because we have let it go on so long, so to speak, people have forgotten about that. So if you're looking at it from other countries' perspective, you're like, oh my God, this is definitely an attack on us. We have to retaliate more. So I guess it really depends on how you look at it. And in the grand scheme of things, in a long term view, this could work. Trump thinks this could bring in over $1 trillion, 1.2 trillion in revenue per year. Okay, if we continue on this path. Who knows? It could work. It's going to take some time. But in the meantime, it's causing markets to crash. And I said this, I think this is also on purpose. What did I say about the 10-year yield? Vincent wants the 10-year yield to come down. Not just the 10-year yield, I mean, all rates to come down, but the 10-year yield is something that the administration can effect. Okay, with uncertainty, with markets crashing, with fears of a pending recession, the 10-year yield goes down. You know why? Because that means people are flocking to it. People are fearful about risk on assets, so they tend to take all their money out and then they go buy a 10-year bond, which to me makes no sense, but that's what a lot of people do. And when a lot of people do and demand is up, guess what? The rate actually goes down. That's how it works. The rate goes up when there's less demand. Rate goes down when there's a lot of demand. And look at this. This is a huge, huge drop. Those of you guys that watched my video from a couple weeks ago, I theorized that all this will stop, okay, when we drop close or near the 10-year yield rate that we saw back in September, which was around 3.64%. We're getting really close. Look at how close we are. From December, from the peak, or January the peak to now, we have fallen quite a lot, 0.75%. And we're not too far off from those levels. And back in September was when quantitative easing happened. That's when Bitcoin found a bottom right around 50,000 and we start going up. And all things start going up, not just Bitcoin, crypto, US markets, tech, everything started rallying. And they rallied more after the election. Okay, so we're getting back to those levels. And plus, not only the 10-year yield, this puts a lot of pressure on Fed Chair Powell to cut the Fed fund rate. Look at this. Look at the probability for the next FOMC meeting. Now, that cut in May has jumped up to 22%. It was basically at 0%. Now has jumped up to 22%. And the one in June has jumped up to 60%. So it's either going to come May or in June, that quantitative easing. Back in September, right around here, when everyone thought we were going to go into recession, guess what? Powell came out with a 50 basis point cut, the first major cut in 4 years. We could have a big cut if the markets continue to crash and crash and crash until May or June timeframe. So this number, this percentage, 22%, could keep on climbing. We may get that cut in May. It depends on how devastating it is. If it's not devastating enough, then we can wait. We have to wait until June. I think this is all part of the plan. So quantitative easing is what we need to wait for everything to bottom, and then we start heading up. And once we start going higher, it's going to be a ferocious bounce back up. It's obvious that we have been we're way in oversold territory. And all this is really artificial if you think about it. Everything is created, all this uncertainty, all the sell-offs and everything created artificially on purpose, right? But when the rates get down to a certain level and the easing starts happening, that's when things bounce back really fast. But going back to my point, I said there are good things happening in crypto, good things happening specifically for Bitcoin. Let me show you what's happening. Okay, first of all, yesterday we had surprisingly big inflow into the Bitcoin ETFs. We had 3 straight outflow days prior, but we had a massive inflow day yesterday. Okay, that's a good thing. And this is definitely a good thing. Fidelity, one of the largest asset managers on the planet, finally opened their door to retirement accounts, so that, hey, anyone with a 401k, with a pension, or any retirement account can now buy Bitcoin with it. This is enormously huge. Fidelity has been pro crypto, pro Bitcoin for a long time, and you can buy Bitcoin and crypto with accounts, but not your retirement account. But that has changed today. And in case you're wondering, okay, there's 24 million accounts of 401ks, 16 million with IRAs, and 9 million with 403. I'm not even sure what a 403 is, but overall, there's about 11.5 trillion dollars in retirement and non-retirement funds. So not all of it's in retirement, but we're talking about trillions, trillions upon trillions upon trillions. Okay, in Fidelity, that could be buying Bitcoin. And we know Bitcoin is the best asset to hold. Better, in my opinion, than even gold. A lot of people are flocking to gold. And, gold has been the de facto hedge that people flock to when there's uncertainty, or the 10-year yield, or, bond, or note. But Bitcoin is the newest player in town, and in my opinion, it is the best because of all the reasons I've been talking about. Because the scarcity factor is number one. It's the biggest one. Gold, you can always mine more. Bonds, always more being created. Bitcoin, the set supply, that's it. Okay, controlled by code, not by people that are greedy and can be corrupt, not controlled by banks or governments. I mean, these are big things. And running on top of a decentralized network that is arguably the most secure on the planet. That in itself is priceless. No one else can create that. So, that's why so many are flocking to Bitcoin. And even in my yesterday's video and many other videos, I've shown you guys how whales, long-term investors, long-term holders, and even new private companies, public companies are all still loading up. Okay. Metaplan is one of them. Just bought another 160 Bitcoin. They are among one of the few um, public trade companies that loaded up tens of millions of dollars worth of Bitcoin in Q1. Almost 100,000 Bitcoin was bought in Q1 by just like a handful of publicly traded companies. They are one of them. We're talking about like $10 billion worth of Bitcoin being bought in one quarter just by a handful of companies. So don't let all the big players buy everything up. And states, let's not forget, states are joining in. You got 2 more states that are pushing for Bitcoin reserves. Pretty soon, we're going to have all 50 states having their own reserve. And we already have one as a country, and many other countries are looking to do the same thing. Right? So, that's all I have to say. There's a lot that's going on. It's a very scary day, and it could continue. Obviously, it's not even the end of the week. Today is only Thursday, right? We'll see how the day goes. It could end even worse, but right now it seems like we're holding at this level. People are still kind of like trying to digest this. Many companies have come out and said, we're going to lose X amount this year or next year due to these tariffs. I saw the jewelry company Pandora come out and say we're going to lose $180 million due to these tariffs. And that's just the tip of the iceberg. Every other company out there that has manufacturing or supply chain outside the US, they are going to get hurt by this. But long term, maybe this is what makes America great. Short term, there's going to be a lot of pain, but I think that quantitative easing is going to come in the next few months. We just have to wait it out. And as for Bitcoin, let's see if we can hold at this level. Okay, if the day ends and we're still at 82 and we start recovering back up just like yesterday, this would be absolutely fantastic to be able to hold at these levels, and it shows you that seller exhaustion is is basically here, and that the long-term holders like you and I and the public trade companies and everyone else in between, the ETF holders, are still loading up. That's how much we all believe in Bitcoin. Let's see. Let's see what happens. All right, guys, that's it for today's video. Stay strong, my friends. Smash the like, subscribe to the channel. I'll see you guys later. Bye-bye.